All right, let's talk about some profit taking and profit management and how to sell the position once it reaches the profit objective. So I got triggered into this trade on KL, Kirkland Lake Gold here off of this week's scouting report, moving in the right direction. Caught it on the breakout. And if you look at our report here, we've got stop loss, we got a target, and that's the entry price, and we got our target. So I'm already triggered into the trade, and I just canceled the stop loss so I could go back in and put in a profit target order as an OCO bracket. And I'm going to put in the OCO stop loss, but I'm also going to put an order to sell out at the top. And I want to talk about the different order types you can use. So I'm going to switch over to the Thinkorswim platform. And again, here's the little position it's got going on. It's got picked up a couple hundred shares, and it's doing pretty good. The stock's up over $1 on the day, and has a nice little gain. Again, I just canceled the stop loss, and I might even adjust it up close to where I entered into the trade. Not quite. I'm going to keep it a little bit lower, but I'm going to adjust the stop up and set a sell limit. Now, there's two ways to sell out there at the target, and I'm just going to go grab that little page. There's the 200 shares. I'm going to go create a closing order and sell. Now, if I sell at a limit, and I think it can go out to that, again, those profit targets, just so we're clear, were 47, 50, and 50. And I want to show you how good those profit targets are. When you look at the chart, you can actually see, hey, it ran from 32 up to 39, so that ran 7 points, and then it ran from 36 up to 44, so that ran 8 points, and here it is lows at 40, and so 48, 47, 50 is right in line, and then 50 would be if you got a little extra run and a fat number. So we're going to set that target out at 47.50 or so, and drop back into the Thinkorswim. Now, if I use a sell limit order and I set it up there at 47.50, that order is not going to fill unless the price trades at or above 47.50. That's what the limit order means, at or above. Another way to set up that order would be to use a contingency. So I can click on that little cogwheel. Let me show you how to do that again. Over here on the right, they got this little cogwheel, and I can click on that, and that'll open up a contingency order ticket that will allow me to change and set criteria off of different things, to submit the order at different times, et cetera, et cetera. And I can go and say, well, hey, I want to sell, if the mark price, that's the middle price. You can choose different methods, but the mark price works. If it gets higher, greater than 47.50, 47.5. And then once I've got that number selected in there, I can come up here and say, well, let's set that to link to the last traded price, or you can go off the mark. That's a very effective method to go off the mark, which is the mid price. And I can say, and don't sell it for, more than 5 cents less than the mark at the time that trade goes off. So that's one way of doing it on a contingency order. Limit order, contingency order, doesn't matter which one you use as long as you're setting that profit target order. Now, I'm going to make this order an OCO, so I can put in the stop order at the same time, and I'm going to go create a duplicate order there, and then I'm going to change this one down to a stop market. And then I got to go set the price, and I'm going to go do a look at a couple things here. Trade got filled at 43.29. Today's candlestick low is 42.99. Low is 42.99. So again, getting filled at 43.29, not too far off the low. I'm going to set the stop loss on this down below the 9-period moving average and give it a little bit of room. I had my stop down here before below the base. I'm going to move it up to below this. We'll go with this 20-period moving average. So I'll set the stop at 41.89, giving it room to breathe. So now I've got my stop. We'll set it at 41.89, and that's a stop market order. So if it triggers at or below that, we're in good shape. So now I've got some good trade management. A target at 47.50 to sell the 200 shares, and a target at 41.89. And maybe I'll go and I'll make that sell just 100 shares at the target, and then I'll have the position. I'll readjust the trade at that point in time. That's scaling out, and let's see if we can run up to that $50 target while we're at it. So I'll go ahead and hit confirm and send. And now you see on the order the pending sell limit for the 100 shares and then the stop loss adjusted. And those are set up as an OCO. And again, the sell limit, I could have also used contingency orders on both or either of those. Simple orders, limit orders, usually how I personally go about that. I use contingencies more often with options than I do with stock. And again, I got an OCO, if that price continues to rise and hit that target, it'll scale out. If it comes back down and hits the stop, it'll stop out, and whichever one gets hits first, the other one will cancel. Sell limit orders, contingency orders are your best friend as a trader. They help you control the price. It's really important that you sit down and really master those types of trades, and you practice them in a virtual account so you can get the mechanics down so you know exactly what you're doing when you go live, and that'll help you, again, control risk. Risk is directly correlated to control. Those order types help you control that risk and lock in those gains.